name is Alex Wong. I graduated from Melbourne Uni in Australia, and I specialize in accounting and finance. I got my chartered practicing accounting in year 2002. In InTune, I run the business development segment. I'm also a certified partner accounting running with my wife. My wife is actually the other partner that runs the firm.
My name is Lily Yong. I'm graduated with a corporate finance degree from University of Adelaide, Australia. My first job is with Ernst & Young, an accounting firm, for 5 years. Then I moved on to manage an internal audit department for an Australian listed company. I'm a member of Certified Practicing Accountant Australia and also a member of Malaysian Institute of Accountants. So in InTune, I am the managing partner. I take care of the sales, business development, and also overseeing the operations at InTune. So I've been a practicing accountant for the last 20 over years.
The company was started long time ago when I was still with KPMG. So during that time, I got a lot of friends who are having complication and stress when they run business. And most of their challenge is they cannot hire an accountant. So as a result, they always only hire maybe a clerk or an exec. A lot of time they have a lot of issues with their finance, payment, sometimes the money get lost, sometimes the accounts don't close in time, payment is not done in time. So that time when they wanted to hire me, then I was thinking, how are they going to pay me? Like if they were to hire me and I charge them 10,000 for SME, how can they afford me? So I went back and I think, and then one day I got this idea. This idea just popped up. If 5 of them combine, each one maybe pay me 3,000 a month, then I can serve 5 of them at one shot. I become like a HQ accountant to 5 of them. Then I can assemble a team to actually support them, and that's how InTune was formed. In terms of the company, our team structure is divided into sales and operation. So the sales is very simple. We serve our client by understanding their need, and then we provide them the solution. In terms of the operation, is divided into 2 segments currently. We have the finance, which take care of the day-to-day accounting for our client, from payment to preparing the financial statement. Another team that we have is doing the HR and payroll service to ensure that the day-to-day of the salary and remuneration, including compliance, are taken care of. As an accountant, as a service provider, we need to be able to sync along, tune into the processes of our client and customize. For example, maybe a manufacturing client would be very different from a trading client. So InTune means as a provider, we are tuning into their needs and requirements.
The vision of InTune is to be the leading finance and human resource outsourcing provider in Malaysia. In this vision, we want to create financially driven entrepreneurs and businesses who runs their business based on numbers, analytics in driving their business to their goals. The mission of InTune is to support every small medium enterprises becoming large by being their strong finance and HR pillars for their businesses. This means that we are providing them a team of knowledgeable professionals with strong processes and workflow to support them in their growth journey becoming large. There are 3 main types of services being provided at InTune. Number 1 is the finance, number 2 is the human resource, and number 3 is the consultancy. So in terms of finance, so what we do is that we do the everyday accounting and finance functions for our small medium enterprises clients, like preparing payments, even issuing invoice, official receipts, reconciling their sales collection on an everyday basis, up to giving them a financial dashboards and accounts every month, up to on a half-yearly basis to sit with them and review their financial dashboards, and at the end of the year to take care of their audit and taxes on their behalf. That's on the finance side. So the second type of service that we provide for our client is human resource related, which means we take care of their payroll. We make sure that the payrolls are calculated correctly, accurately, on time, and in compliance with all labor laws, EPF, SOCSO, etc. And then taking care of the leave for their staff and making sure that at year end, all the forms, all the compliance matters with Income Tax Office is complied with. So in terms of HR, we also assist our clients to issue HR related letters, like when a new staff come on board, to give them an employment letter when they confirm, and if there's any increase in salary, bonus, we help them out with all those pay.
Good evening, everybody. It's the InTune Freedom Series again. Now, what is Freedom Series? InTune, we come up with Freedom Series to support SME business owners so that you can focus on your business and be free from all the pains of doing your business. So InTune specializes in doing outsourcing, and we cover both the finance and the HR side. Good evening again. My name is Alex. I'm the Marketing Director for InTune Business Services. Today, we have a very special guest, one of our colleague from the operations side, which has been holding the fort for many of the clients. So let me introduce you, Surian, and I'll get him to say a bit about himself. Hi, Surian.
Hi. Okay, thanks. Okay, my name is Surian and Mani. So everyone known as me as Surian. So a bit about me is like I have about 6 years experience in accounting, and I joined in InTune as a executive accounting and finance in 2022, and then been promoted in 23 as a semi-senior, and also now currently I'm perform as a senior in the team to lead the team.
Yeah, so Surian is one of our main head chef in the kitchen, making sure that all the finance, all the payment, all the AR, AP is being cooked out for our clients. So this weekend, not this weekend, today we're going to talk a bit about some of the SME pain, and we're going to talk about some stories that we work in InTune in terms of our client having cash flow issues. Just as a general, Surya, maybe you can tell our client what, during your 2 years plus working with us, what are some of the horror story, or what are some of the pains you experience with some of our clients coming to us to support them in terms of their cash flow?
In terms of cash flow, from the experience in InTune, I have seen that some of the clients are suffering in collection, which is late collections and overdue in their bills, everything. So like this is two area where is the cash flow is like very tight for them to that means to perform in the business.
Which is true. I think a lot of SME business owner outside there, they are very good at delivering their product and services. So the last thing they want is to get bogged down. Have I billed my client? Bill already, have I collect? Or how much do my client actually owe me? Yeah, and also at the same time, paying their supplier and vendor, how much did I order? How much do I owe them? How many days I owe them? Can I order? And sometimes when they want to order, they suddenly realize the credit burst, they cannot go in and order some more. So today we're going to deep dive a bit into the two main process for every business: the sales process as well as the collection process, which is these two combined together will either determine the company in terms of their cash flow. So let's start with sales. Let's have a talk about sales. Surya, I'll let you talk about what is the sales process, what generally a sales process of a business owner looks like.
Okay, when sales process is like we getting quotations. That means that we get a quotation from the buyer. Then we, if let's say we agree with, that means the mutual agreement between the buyer and the seller. Then they will issue an invoice for that lah. So so that once the invoice is issued, then with the agreed terms, everything lah. So once they agreed, then only we deliver the goods or services to them, and then follow up with the payments lah, collection.
Correct. So basically, in a sales process, it's very important to have a quotation, like what Sudan was sharing. And once the PO or order with the quotation signed back, that's where the sales process actually start. And before delivering of the good, it is very important to talk about the terms of payment and the credit control side. When are they going to get paid? And a lot of our clients, sometimes because their lack of experience, they don't actually talk about it. They think that I just give you an invoice and then they just wait for the money to come in. And when no money, then they start calling, Mr. Client A, can you pay me this invoice or that? And even for some of their clients who buy from them, they don't actually know when to pay them. We also have clients that chase our client in order to pay them because they haven't received an invoice for them. So these are uh, some of the challenges that is in on the field. So Surian, maybe you can share more from your experience when we do implementation or when we actually new client come and join engage us. How did we support them in fine tuning this sales process?
How we will do we will monitor the AR aging lah, so that we will tie back the bank collection anything happening for the particular invoice or not. If let's say there is a overdue on the AR collections, then we will highlight to the client whether is it anticipated to collect the money or not, and any follow up legal action is follow up again to collect that.
And also part of how when we do implementation, we actually work with our client to set up the credit terms in the setting. So as and when they issue an invoice, maybe some client have credit application, they may have a credit limit, say 100,000, and every time they get an invoice, they have 60 days to pay. And in a business, sometimes you may have new client, you may not want to give them that credit term yet because the relationship is not there. It can be, cash before delivery or cash upon delivery or 15 days. So these are some of the things that our team will also support our client in setting up the sales process. So it's not just as simple as just having the invoice issued. Is also this invoice issue for this client, is it within the credit limit or not? And if the credit limit is more than that, that's where the system and our client will also be able to know, this client actually owe me beyond 100,000. If I want to sell more, it's also a way to manage the risk. And that's when they can work with our client, like if they breach their credit limit, maybe the next order they can pay cash before delivery, or they can pay it down to be within the credit limit before the issue. So these are some of the things that business owner out there, when you engage us, my team will actually sit down with you and set this up as part of the sales process. So it's not just a matter of issuing invoice. Of course, the most important thing is once the delivery go out, you get a confirmation of delivery of services, invoice must be issued. So within the invoice itself, it needs to match with the quotation or the purchase order in terms of quantity and price, and it should state the terms of payment and when they are going to get collected. And it's from there, Surian and the team will compile all these invoices together and give you a report, which are the debtors, whether they are current, that means it's not due to collect from them yet, which one is due 30 days, 60 days, 90 days, or more than 90 days. So in that sense, when it's more than that, that's where Surian said that we must have credit control procedure, send statement, send reminder, and if nothing happened or it cannot come to a collection, maybe a potential legal action such as letter of demand or going to credit control into a legal action. So this is actually moving on to the collection process, which we talk about. So Surian, before I talk more, I'll let you share what are your views on the collection process.
I think it's very important to in order to have a healthy cash flow. If let's say we didn't do on the collection process is not in a good process, then the cash flow will be tight, and then we are unable to pay our the overheads or costs lah.
And that's where, on top of just the invoice process, the sales process, our team will also guide our client in the collection process. As a service, we don't collect for our client, but we support our client by setting up the collection process. So, for example, the team will also have a SOA. They will every month maybe churn all the statement of account for our client to be sent to their customers. And we can also set up reminder letter as part of our initial setup that, by certain date, they'll send reminder letter, first reminder, second reminder, third reminder. And if we notice that the amount outstanding is too long, is where that we recommend them to maybe work out letter demand or go to CTOS or take legal action. So these are the two process combined together that make up the cash inflow process. So like Surian said, any business that I don't care how much you can sell, but if no money in, you're just getting paper. I owe you, I owe you, I owe you. And come to month end to pay salary, to pay rental, to pay expenses. That's where the stress will come in. Okay. Surian, we have a case study to be shared with our client, right? With our audience, right? Let me
Yeah.
just share. Okay.
Okay. From the case of the case study, we are looking at the logistic company. So where they have during my experience when I analyzed their AR part, so I identified there is a collection happened, but late billing lah. There is a service performed and customer paid, but there is a invoice haven't issued. That means the revenue haven't recognized. And other than that, we also unable to track the how much actual collection owing by the customer. So like there is an invoice, and some of the invoices are already being collected, but it's already like a long outstanding, and maybe some is like already not perform the service lah. So it's like need to CN, but there's no CN for it. And which is I explained just now, is like there is a collection, but there's also no bills. So result is AR aging is in the negative form lah. And in due to this of late billing and also negative balance, it also it will also like the SSC report will be inaccurate, and sometimes it will like overpay to the legal authority lah.
Sometimes don't know over or under. Basically, it's all over
Yeah.
the place. I
Yeah.
think when our business owner, they don't handle their invoicing, their sales billing cycle properly, this is generally what happens is all over the place. They don't even know which is actual sales. Like you say, sometimes you deliver the service or you under deliver, there's no credit note. And if sometimes customer pay, you don't even know for which invoices or for which services. I think that's where all the report and all the issues will come lah. And I think these are some of the nightmares the client do face. And a lot of time when they don't have cash, they don't even know how much to collect from which client. And this is a very classic example when the sales process are not in place.
Yeah.
Okay. So let's move on to the next one. Let's talk about purchasing process. So just now we talked about the sales, which is the revenue. Now we talk about expenses, which is the purchasing process. So Surian, I'll let you share about purchasing process.
Okay, purchasing process is like okay, to maintain the inventory lah, mainly. So if let's say for we have a shortage of inventory for a particular product, then we will give a PO, which is purchase order, to the supplier, and then to quote them, and then they will issue a billing for the particular product with the agreed price with the both party lah, and also the payment terms and also credit terms. How long we can have, how many days I have to can pay you lah.
Correct. So in every business, when we do purchasing process, mean there must be a mechanism to track which are the vendor you engage based on what price, what are the terms of delivery and the payment. And what InTune do is as well is to work with our client when the actual invoice is being delivered from our supplier or from the vendor, there must be someone who match it to the PO or service order to make sure that whatever they ordered, the price, the quantity, or the duration matches before we do payment. And that's when our team from the kitchen will then accrue all this into the system to come up with the AP report. And the terms is also important. Then we know, because maybe some supplier give us 30 days, some give 15 days, some give 60 days. So with that, the team can then put everything into the AP report and provide that big picture. Okay, this one we spend maybe 500,000 on expenses on the purchasing, but this month is due this amount, next month is due that amount, the third month. So that also allowed for cash flow planning. Okay, and of course the what Surian shared about is managing the terms of payment. When the terms of payment are not being managed, sometimes we need credit facility or working capital or internal capital to bridge that gap. So it get more heavy when inventory are being built, because inventory basically means I spend the money to create the product first, or manufacture or build the product first before I sell, and that need cash, and I haven't sell it, so I may not have collection coming in, but I'm already incurring costs to actually produce this inventory. So that's where a credit facility or all this needs to be look into. If I take 90 days to manufacture a product before I sell it, and I take another 30 days to collect, means my cash flow gap could be up to 100 over days. And this is where managing payment and collection versus the credit facility, whether it's internal working fund or a OD or any form of a bank facility, will help to bridge that gap. Anything more from you, Surya?
Nothing.
Nothing. So you also have a case study on the next one, right?
Yeah, correct.
Yeah, let's have a look at the case study.
So this is mainly from the company which is dealing with the training and education lah. So where there is most of the payment process are based on the POs. So there is no final invoices received. So we unsure whether it's like the PO is the final one. So that means the cash is out based on the PO, but we not sure whether it's like how many credit terms was agreed between the two parties lah. So it's better if, let's say, we have a final invoice and we have the credit terms. It's better to utilize the credit terms lah, in order to have a healthy cash flow, so that we can invest in other area.
And this is actually very dangerous. If any business who pay based on PO instead of invoice, is actually very dangerous, because you don't even know whether the service is completed. And the challenge with also when let's say the tax people come and audit the company, any payment without invoice may not be allowable deduction. So that is also part of the initiative of e-invoicing. So SME business owner, if you're outside there and you're paying based on PO, please don't do that. With e-invoice coming in, the whole idea is they want to make sure that every payment is matched to a proper invoice. Okay, back to you, Surian.
Yeah. So another this is the leading to the AP aging in negative lah. So that there's a payment, but we cannot actualize the PO as a final purchase. So so that there is a, due to the things, then the aging AP aging will be negative. And add on with the thing is, some is like there's a ad hoc payment, a lot of ad hoc payment, which is they don't have any system, like a month, two times payment. So it allows the cash flow to be maintained and managed, so that we can have to focus in other area to invest or something else.
Yeah, true. So these are some of the things that business owner, if you're outside there and you're having cash flow struggle, sometimes it's because of your whole payment or the way you manage your creditor. So I remember there are many creditors that many of our clients, when they come in, I remember we teach them to sit down with their supplier and negotiate a terms of payment, and to come up with a process. When I issue you the invoice, how do you deliver, and when the deliver happen, on what day I will get invoice. So it's to set up this whole purchasing process and also your creditor process. And one of the things that is highly recommended is also on a regular basis to have a supplier recon, to get a statement from your supplier and then reconcile against your system. So this is especially important, like what Surian said, is when you are I understand in the business, sometimes you need to put a deposit, so it will show as a negative in your creditor, and to be able to chase for the invoice and offset it, and then to be able to manage your AP or your creditor aging in a healthy way. If not, it show negative. Some you owe people. It seems like you don't owe people money, but there could be a big negative there, and you also owe people a big positive. So that is where managing cash flow becomes harder, and that's where you will notice that business owner out there, they find themselves, no matter how much I pay, like macam not enough. Okay, so tying those two is to come to this thing called the importance of managing your break even in cash flow. So your sales, purchase, inventory, overhead, like what we talked about just now, is to be able to match an ideal business. The sales come first, then only they purchase, then they make profit, they keep minimum inventory, they pay off the overhead. That's where profit happens. That's a very ideal environment. Now in a business world, sometimes it's never so ideal. You build inventory and overhead runs every month. So having that ability to actually match your sales versus your purchase and go month by month will be able to allow you to see the cash flow gap. And we are gonna later, me and Surya is gonna give you some strategy how you can identify this gap and manage this gap. So viewers out there, if you have any question, please comment. Yeah, then if me and Suryan can answer you, we'll be more than happy to answer you. So now we're going to give you a bit of strategy. So one of the strategies that we already talked about is to, with your client, like I remember when we started business, even when InTune started business, we don't have a lot of cash flow, right? So we have a strategy with our clients. Some of our clients, we bill them 3 months in advance and we give them a 5% discount. So they pay us first for our service. That time we are still very, very kecil. That time we are really micro, 3 staff, our overhead is so high. So we provide a discount incentive to get our client to pay us 3 months in advance. So even if you notice business owner outside, sometimes when you buy things and you pay in advance, they give you a slightly special rate. And if you buy in a bulk or in a larger quantity, you also get a discount. So, and the discount vary between cash before delivery, be CBD, or cash upon delivery. That also give a different rate. And of course, then you need to negotiate your term. So some client may negotiate terms with you. Generally, for us, our business, a healthy business is between 30 to 60 days. So depending on how your pricing. So some client who wanted longer credit term, you can also work out a bit in terms of the margin. So in terms of business, especially let's say construction business, if you're asking for a 90-day term, maybe the product will have an adjustment of 2% in price. Basically because I'm riding on my supplier's credit facility and it's being adjusted back into the price. Same thing if you go shopping, right? You notice if you pay installment, the price for installment product is slightly higher compared to if you pay cash and if you pay credit. So basically, it's the same strategy that you can apply when you are discussing with your client is to work out this. Surian, do you have anything to add on to this strategy?
I agree with you lah, because like if let's say there's a long outstanding, right, we can give some of the payment, let's say like in payment incentive, so like if let's say they pay in 30 days, we can give a certain discount, so that they can use this advantage to manage their cash flow also. Rather than that, we same time lah, win and win lah. Supplier also win, we also like win.
Yeah. So these are some of the strategy SME business owner you can use. You can sell prepaid service. So there are some of our clients that collect prepaid. So they collect the funds first and then they provide the service later. So it's like a subscription, but you pay in advance. So that can also work, like you pre-book, like even when you order online, there's pre-order. You order that only they're manufactured and they say the delivery is 15 or 30 days later. So that's where they can also give you a lower price, and because you also pay them upfront, they don't have to keep inventory. As a result, some of this saving from your relationship with your client can be passed. So this is one of the strategy you can do with your client. Okay. So next we're going to talk about strategy you can do with your supplier. So before I add in, Surian, I let you share first about some of the strategy, what some of our client or SME business owner do outside there in terms of managing their supplier, their terms.
One of the strategies that they can use is like nego the terms, like payment terms, credit terms with the supplier, so that it can be a manageable terms, so that we can meet our other collections on time lah, so that we can pay a bit delay, so which is a comfortable zone for the company to manage their cash flow. Other than that, like in order other than we pay every invoice on frequently, we just like schedule it, so that we for example, like this month, we schedule two cycle for the payments, so that we can collect all the payments, and then we pay in one shot, so that we can in between we can manage the cash flow lah, very well. And if let's say there's a like discount or some program that run by the supplier, like advance payment. If let's say you advance payment, then they have a 50% offer. So use it wisely lah, so that we can enjoy that benefit, so that we can pay lesser than what actually pay. So we can save around like let's say there is a discount of 5%, so we can save it at 5% and utilize in other ways lah.
Yeah,
To
so
make it efficient.
like what Surian said, similar to how we work with our client, you can also work with our supplier reverse. Now for
Yeah.
our supplier, we are their client, so we can also discuss with them on credit terms. So if I know this job, like maybe certain job will take 180 days for collection, and I want to work with this supplier, and this supplier only offer 90 day, then the opportunity is to sit down with this supplier and work out the cash flow gap. If they are agreeable to it, then that's fine. Or if they want cash flow in advance, maybe then that's where your opportunity for our client to make more money. I pay for it first, I pay off the supplier first. As a result, I'm using my funds to bridge the gap. So either way, it's always about managing these two devil, the sales as well as the purchasers, the debtors as well as the creditors. And once you're able to manage these two, right in between them is after your overhead is your profit. So it's always managing these two. So of course, the third strategy is the working capital and the inventory management. Surian, I'll let you start before I add on.
So, so one of the strategy is like managing the inventory lah. See which one is like well performed. There is profitable inventory for the company. So if let's say the profitable company, so invest it on the thing wisely, and then at the same time you monitor on the slow moving inventory, so that if let's say slow moving inventory, like don't invest more on the thing lah. So we can monitor that inventory, so that we can optimize the inventory level, and also can support in the of managing the cash flow lah. So we didn't use we didn't use the cash to stock up, but the stock is not moving up, that not generating invoice in sales.
Okay, so what Surian gave a very great strategy. Always focus on number one, fast moving. It must be fast moving. Second thing, fast moving and profitable. That would be the best strategy. So this is how you reduce your working capital, because inventory will tie up your cash flow. You end up paying supplier and you're not able to sell. So that's where when you minimize your inventory, that's where you're using minimum working capital to create fast moving stock with fast profit. So there is the Japanese, they use this just in time policy, is also to manage this, so that when they want to deliver something to the client, they work out the timing of delivery, versus the timing of production. And they close it as minimum as possible so that when an order come in, the stock come in, and then combine manufacture and deliver is at the shortest time. And that is one way the Japanese use called just-in-time manufacturing to cut down the working capital and to improve the cash flow gap. Okay.
Yeah.
So next, let's talk about break-even numbers.
Okay, break-even numbers. Okay, so this one we need to like monitor lah. So actually tracking the performance of the overall break-even points. So break-even is mainly is like been shared before, like which is the sales minus the variable cost lah. And then it comes with the particular cost that we can subtract with the fixed cost, which is the overheads, and it will give us the profit. So we can monitor how many, for example, roti canai lah. So if let's say one roti canai is cost about we're selling at 2 ringgit, my cost is about 1 ringgit, then my break even point is like let's say
your overhead is 1,000.
Yeah. Oh, 1,000. Okay.
Yeah. So how many roti canai you need to sell in order to break even?
Yes.
Yeah. So basically, it's 1,000 roti canai in order to break even. Okay,
Yeah,
so
correct.
let me show you a calculation of break even. So break even sales, like what Surian talked, is actually number one, you need to determine your total fixed cost. Because not knowing your fixed cost, you don't know what you want to break even. Fixed cost means your monthly fixed commitment, like rent, fixed salary. You already commit the rent every month. You already hire certain staff that whether got business or no business, you have to pay. So in this scenario, the fixed cost is 5,000. Okay. Next, you need to know your selling price and your variable cost to know your gross profit margin. If you manufacture, like what Surian said about roti canai, you need to know the price of your flour, how much how much gas variable cost you use, and the profit. So in the case of this scenario, the fixed overhead cost is 5,000. While the margin for the product that they sell is 50%. So when you take 5,000 divided by 50,000 means every month if my sales hit 10,000, assuming I collect all my money, I cukup make enough GP to pay off my fixed cost. So means if I hit 10,000, my P&L will be zero. I don't make profit, I don't make loss. Okay, so that is where you can identify your unit sale. So at 10,000 sales means if each product I sell at 20 ringgit, I must minimum sell 500 unit. If that month I don't sell 500 unit, let's say I sell 400 unit, I know I'll be in trouble. I will need to come up with money to top up the 100. And the moment I sell 501 unit, start to celebrate because you start to make profit. So if you can sell 1,000 unit, the next 500 unit is where you actually make profit. So that's so if you are SME business owner and if you are doing finance for any of the businesses, the first number you must know is this client or my business, what is my break-even sales? Because once I manage my break-even sales, that's the first step to making money. Okay? So the next are the ratio. We also have ratio. Yeah. So some of the ratio that we use, this one I'll start it, is also two ratio that a lot of business owner or finance people can use is current ratio. Current ratio basically is how much liquid asset I have against my current liability. So example, my current asset, I may have cash or stocks equivalent to 200,000, but I owe people or my creditors is 100,000. So I know I have 2 times. So at any point of time, I have ability to cover my liability 2 times. So it indicates the company or the business ability to cover short-term payment obligation. So any ratio above 1 is good. Means I have more cash or good. If I really need to cover my liability, I can either use my cash for my current asset or I can liquidate my inventory and use this cash to pay off my current liability. So any business which is more than 1 is actually very, very good. If you are 0.1, then you'll be very, very stressed out. That means you only got in 0.1 means I only got 100, I got 10,000, but I owe people 100,000. So the ratio is 1 to 10. That's when you will feel that everyone start to chase for money, but you don't know who to pay because you only got 10,000, but there's 100,000 chasing you for payment. So you don't know to pay supplier A first or supplier B first. So one of the ratio that is very important, business owner or if you guys are in finance, is to monitor this number. How much current asset I have and liquid, and versus how much current liability I'm owing immediately within the next 30 to 60 days they have to pay, and use this current ratio to help you to look into your cash flow. The next one is also a quick ratio. Is similar like current ratio, but it talks about current asset minus inventory. So in this case, it really talk about physical cash. You don't talk about, because inventory sometimes take time to sell. Like I may have, in this case, I may have 50,000 worth of inventory, but for me to sell and collect money, maybe I need minimum of 30 days. So I want something quicker than my current ratio. This is where you take your current asset and then you minus out your inventory first before you compare against your current liability. So like just now, that the previous scenario is 200,000. If they have 50,000 inventory, they take it up. Means if I now go and collect from all my debtors and my cash, I will have at least 150,000 in hand versus my current liability of 100,000. So my quick ratio is 1.5. So quick ratio is more stringent and it provides a more accurate in terms of the company ability to meet the short-term obligation with its most liquid asset. So that's when you notice that if the figure is very, very low, some company will quickly go and, okay, I got a lot of money in inventory. I need to quickly sell off this inventory to turn it so that they get cash from there. So these are some of the strategy that business owner you all can use in terms of managing your business. And these are some of the ratio that you can always rely on top of things that Surian and I have shared: your sales process, your collection process, your purchasing process, your payment process, and then your working capital in terms of your inventory and your ratio, break even, quick ratio, and current ratio. Okay, so how do InTune actually support our SME? Just now, I have already shared about how we help you to set up the system. You know, when you engage us, we have a team of professionals. You don't just get one staff, you get 3 staff, you get someone like Surian who will take care of your main kitchen. Of course, under Surian, there will be 1 or 2 staff that will be supporting him. And there's an accountant that will be supporting Surian in terms of implementing all this. So that's where, and the good news is we charge you a fixed price based on the service level agreement, depending on your business. You can be small, medium, large. We have 3 packages to support you, and we help you to set up all these things for you. And certainly, we also do all the report, like Surian said just now as well. After we set up the system, we teach you, you run the business. You can actually issue statement, or you can actually issue invoice or quotation from your handphone. The system that we use allow you to be able to issue invoices, statement, or look at balances real time anywhere in the world 24/7. Okay, and it provides you also the information of your payable. And these both are usually, when you engage us, within 30 days, we get it all wrapped up nicely for you. For a medium package, we will get all this report, and you have a copy of all this report, and you know how to use this report to run your business. Okay. Then, of course, on top of that, if you want something more extra, you can talk to our accountant, which is Seok Ting. Then we can sit down with you to work out your cash flow gap in detail. We actually look into your gap. We actually look into your current ratio, asset ratio, break-even ratio, and we will also support our client to get loan, working capital, to close the working gap. So at least you have a projection of the next 6 months. If I were to run this business, what are the cash flow that I need to close the gap based on my current operation? And if I don't, some of the strategy that Surian and I shared, if we implement that, how would the cash flow gap slowly close up? Because once you manage your sales to be faster, collection to be faster, you are able to talk to your supplier and move the purchase lower. You actually have a smaller gap instead of a wider gap. Okay, so all this at the end of the day is for business owner like you outside there. You can focus on business. You don't need to worry about Ayo, say lor, I do my sales, I haven't issued my invoice. Yeah, I issue my invoice, I haven't been collecting. Ayo, I pay this fella, I haven't got the invoice, but I've been paying so much, and then how much I actually owe. These people, did I overpay them or not? And then you get trouble, like what Surian said, you get trouble with the custom department because the service tax is either under declared or overpaid. Already cash flow tight, need to put up some more money to pay the custom. So this is where sometimes the headache become a migraine, big headache. And this is how working with InTune, we help you to close the gap. And people like Surian will be one of the head of the kitchen there to take care of you and making sure that your books are well taken care of. So this is what we do in InTune, and this is how my colleague will take care of you. So before we end, Surian, any closing statement to wrap up about cash flow, about SME, and what are the pointers you would like to, what message you want our viewers out there, to take home after talking to you and me today?
Mainly need to manage the cash flow lah. So the collections, the faster the collection, the delay the payment a bit is better. For me, it's like to have a healthy cash flow.
Yeah. So business owner, running business is always about cash flow. Sometimes you may have big contract, you may have big orders. Without cash flow, it's like driving a Ferrari without petrol. So it's very important to make sure your electric car or your car is fully charged and have petrol. And cash flow is basically that blood. So if you need any support from us, you can visit us at our Facebook page, InTune Outsourcing. You can WhatsApp or call us at our hotline 018-288-2209, or visit our website intune.my, and we have a lot of resources inside there. And we also have this Freedom series that we do every other month to provide you insight on how to be financially free in terms of running your business and to get freedom from it. So with that, thank you for joining us. Thank you, Surian, for your time. And
Thanks.
I will exit this with a video. Bye.
Bye.
InTune Outsourcing is providing you a full scope of accounting from A to Z, exactly like an accounting department with a CFO, but not based in your office. InTune enters supplier invoices into accounts payable and do reconciliation with suppliers to make sure that our records are correct. InTune also processes payments to suppliers, staff, and expenses, updating sales invoices into accounts receivable, including collection received, providing statement of accounts to clients so that they can collect and chase money from their customers, providing the financial reports, including but not limited to profit and loss, balance sheets, cash flow, debtors and creditors aging, advisory and financial coaching, including presentation of accounts, highlighting key areas and key analytics to improve and grow clients' businesses. At the year end, we represent our clients to work with their auditors and tax agents for compliance matters. InTune also represent our clients to deal with different bodies and agencies such as Income Tax Office, Customs Department, EPF, SOCSO, and other authorities for matters relating to finance, business, and HR. So if you're still facing accounting problems, you need a professional like InTune to help you. Well, get InTune to fine-tune your decision.